Good morning, welcome back to Morning Markets. Today we're going to be focusing on the US labour market and what's in store for the week ahead. On Friday's Morning Markets episode, we talked about Thursday's job report with the ADP employment numbers. What that showed was 497,000 jobs were added to the US labour force last month. Very strong and double what economists were expecting. On Friday, we had more labour market data. This was official government data, so we can contrast the two to see if we could see strength in both reports. The data was slightly softer than what we saw on Thursday. Only 209,000 jobs were added, which was slightly below expected. But on the whole still relatively strong. We saw May's figure actually revised lower, so some softness creeping in, but on the whole very strong labour report. When we look at the unemployment rate, that fell from 3.7% to 3.6%. What that means is that if the demand for labour is very high and supply low, it risks that wage growth actually pushes up, and it has been. The data on Friday show average hourly earnings remaining constant at 4.4%, and that's very much inconsistent with the target of the Federal Reserve, the US central bank's target of inflation of 2%. But in terms of for the economy, what that means is that if wages are rising and people are employed, people can continue to consume, and that should help fuel future economic growth, which is a good thing. Turning our attention to the data points this week, what we'll be watching out for from a UK perspective, we'll get the latest labour market report. Again, key focus will be on that wage growth component, currently at a very high level of 7.2%. It's expected to soften marginally down to 7.1%. But if it surprises to the upside again, then it does risk that the Bank of England have to put up interest rates again potentially by another 0.5% in order to slow the economy and to help bring wages back down and help bring inflation back to their 2% target. At the end of the week, we'll get the latest monthly UK GDP number. Important to see how the UK economy is performing. In the US, the main focus will be on the inflation report on Wednesday. Headline inflation has been trending very well. It's come down from its peak last year of 9% down to 4% today. The market's expecting it to fall further to 3.1%. That's everything from us today. Thank you for watching, and we'll see you tomorrow.